Welcome to TradeTheMBI.com. This is John's reports for the 9th of October. Well, we talked about that fear trade and what happens when you get people convinced that things are going to go south. You get that reversal, and that's exactly what took place. Pretty straightforward, as we were talking about above the ABM yellow, continues to be long. And we saw this building on the 50K when we had our move down towards the 0%, but didn't quite get there with the MBI white leading. And that's a clear sign that you're going to trap enough shorts to drive things higher. And we'll be able to show it on the chart pretty effectively. Currently, just facing a little bit of softness within that push. Normal, we can get up to 50% pullback in that. But again, still becomes the same situation, below the ABM yellow, obviously, which is now matching here with that magenta reading there. DOC readings of that are still relatively positive. You saw in the DOC for the S&P, it already green had passed shorts in the cyan already. Flipping that hasn't happened on the NASDAQ, so NASDAQ just lagging that a little bit, but very strong with that rising gold, and it's something we look for quite a bit because it just indicates that the beginning of a trend is starting to build. And then it's just a matter of the fact that we were positive checkout, and it didn't take long to turn it around. Had a little bit of softness within it, but just came right back to what was the support lines that were previously established. So it wasn't anything dramatic from that standpoint. And again, the real story here is the interesting one on the treasuries, where yield continues to rise, and that's in the face of what the Fed did. So you're again getting the counterbalance of what the market reads as all this positive data coming through, and the Fed having eased right before an election. Sort of a discount as to what the Fed is doing there, given the fact that, according to their readings, everything is rosy. Take that for what it's worth. It's a sad day when really the data, well, it's been quite some number of years, it's been growing as they continue to massage numbers with adjustments and other relative, add-ins that aren't reflective of the real world. And this is why you constantly have these revisions from previous months, and you begin to wonder, what good is it when you know you're going to get a revision to the downside, another couple of months later. It makes it all just about the show title. And that's really what they look for, is that headline news marker. From an oil standpoint, of course, in the fear, when looks like now Israel's not going to target Iranian oil situation, that eased off a lot of the fear there, and that was a swift pullback. But you also saw Russian refineries on fire, and people underestimate how much oil Russia's supplying. And we have that big NATO meeting on the 12th, and whether or not the Ukrainians will be allowed to use Western weapons deep inside of Russia could change that oil profile very quickly, because that's what they'll target. From a euro standpoint, of course, they're a little bit stuck at this particular stage, because as oil goes, so goes the euro, because they're going to have to convert to dollars for that, and it's a huge drain from an economic standpoint. Gold continuing to fill back into positive extreme territory. It had taken out the last of them just the other day, so it's congruent within that. And we got to, the readings have been soft for some time. Don't expect it to be too dramatic, simply because it's where all the money is headed right in these days. It's been going to gold and the market in matching quantities. So Bitcoin and some of these others have made a little bit of a resurgence, but again, nothing too dramatic, which means that they're really fairly calm relative to what most people used to think of as them being super high beta, that really tranquilized quite a bit and become relatively stable, so to speak. This is what we were talking about yesterday as we were coming down. We had MBI white leading. Magenta had popped back above before we got to the zero, and there was a brief time window where you could look to see if Magenta was going to dip back, but didn't do so. So above that 23% became a long configuration, particularly as we saw a strong move of blue over gray. And that took place just as I was doing the report yesterday. And that's why I mentioned it, because that becomes a great opportunity for short cover. And you can see as shorts continue to add, they were overwhelmed by the bullish magenta over yellow there, along with the blue over the gray, and you could see the cascade effect of that, and it just drove things straight up. And once you were over the 50%, it was just no question you were headed to the 100, particularly in that cross violation, and then you wiped out most of your shorts in that particular setup and flipped it around. And that was pretty clean, and nice that I was able to point that out to you before it actually took place, so that you can see how you can see that develop in real time. When we look at it from a 5K standpoint, it was pretty early on that things started to move to the upside, coming off of the pre-market, and it didn't really let up. You had a brief move back to the 50% on this MBI white spike, but after that, it was just straight up magenta over yellow, and pretty simple. There wasn't a whole lot of thought into it. Post market, we did end up with that significant MBI white spike, and of course, that's the opportunity to clear any weak hands by pulling things back into range, and you just clear those stops, and then you can reset from there. And it's kind of what we're seeing at this particular stage of the pre-market. That's the long and short of it. Pretty clean stuff, and all within what we see from our reading. So I'm very happy with all that, and continue to do the same. As always, though, trade well. Anything relevant, I'll put it on the Skype chat. Have a good one.